Good morning, everyone. Welcome to today's Tech Talk, focused on creating new ways for consumers to shop for financial products with MoneyLion. I'm Alain Meier, head of identity here at Plaid. I lead our identity and anti-fraud solutions. And over the next 30 minutes, we're going to be talking about how Plaid and MoneyLion are working together to reshape the loan marketplace for consumers, how we can create more frictionless, easy-to-use experiences for people looking for credit. And then finally, we're going to be spending some time looking into the future and seeing what's in store for the future of the lending industry. So before we get started, I'd like to introduce Tim Hong, MoneyLion's Chief Product Officer and head of its Engine Marketplace business, who's joining me for today's discussion. Tim, you've spent almost a decade at MoneyLion. I'm excited to chat with you more about your experience and what we're building together. So to kick things off, can you tell us a little bit more about MoneyLion as well as the Engine Marketplace?
Yeah, MoneyLion's a financial ecosystem and platform at the end of the day. We have a consumer app with over 10 million users that come to us for financial advice, financial decision-making, also some of our first-party financial products. But more recently, we've been really focused on our Engine business, which is fundamentally a two-sided embedded marketplace business. We work with over 1,000 partners where we enable our channel partners that have a relationship with users to be able to help them find the financial products they want through our embedded marketplace technologies. And of course, on the other side of that marketplace, we have product providers, whether it's personal loans, credit cards, and more, where they can acquire new customers using our technologies, and most importantly in the lending space, acquire the right customers at the right time. And so what are the data tools, the insights, all of the matching algorithms that might facilitate that kind of task? Ultimately, our customer is the consumer, however, and our mission is really to be able to match a consumer need with the right financial product that lets them achieve their financial goals.
Awesome. Yeah, it's been really exciting to see you guys from the outside. I think a lot of people associate MoneyLion, of course, with the consumer side of the business. So it's been exciting to see you all grow the marketplace as quickly as you have. So, you've been at MoneyLion for 9+ years now, and it's been really amazing to see the growth. So what would you say are the biggest changes that you've seen in the lending space over the last decade?
Yeah, I mean, it's easy to forget that in 2013, we were part of when MoneyLion was founded, we were part of a crop of new fintechs. You could almost call them like fintech 2.0, right? We had just gotten this wave of fintech 1.0 in lending, folks like Lending Club and others. And we've had successive waves of kind of new fintech since then, 2.0, 3.0, whatever. But I think one hallmark of that evolution into 2.0 and beyond is really this kind of rich ecosystem of companies building out what some have called like this API economy, right? This ability to kind of connect and build on top of each other. Banking as a service is one of those trends, but ultimately, being able to kind of support each other in building richer and richer experiences for consumers. Obviously, I think Plaid's been an incredible example of this. Like 9 or 10 years ago, user permissioned bank data was a bit of a kind of wild, wild west, right? It wasn't as established, wasn't as standardized. The players were kind of thinking about how will this evolve. Right now, it's a much more mature ecosystem that works hand in hand with banks and other financial institutions to be able to kind of democratize data and ultimately financial product access. MoneyLion's story has really been about leveraging this kind of API economy and this new types of data on behalf of the user. And I think kind of what we're here talking about today with how MoneyLion in the past has been more of a lender, but now more of a facilitator of how consumers can find the right lending products is really built on top of that structure, that the data, the APIs that now are the hallmark of fintech.
Yeah, definitely. I think from the outside looking in, it's been pretty cool to see how the industry has really self-organized around these sort of standards rather than it being, an outside design practice. Um, so what do you think is holding back lending today? What's the biggest thing?
Yeah, it's interesting. I mean, what the challenges I think that we see, our lending partners and others, are a lot of the same ones they've always seen, but it comes down to like how the consumer is changing and how understanding the consumer is changing, right? That this is behaviorally, this is from a preference standpoint, all of these things that kind of drive and ultimately mean that certain, kind of risk management policies or management practices need to be evolved alongside that, right? So what do we mean by like user behaviors or preferences? It's things that, well, I would argue that consumers are more like real time than ever. Like back in, decades ago, I think, folks maybe had more of a steady paycheck. They might not have had gig economy jobs. Understanding that aspect of the consumer was, I think, a lot easier. Maybe you could use W-2s because it wasn't as volatile as you might see today in terms of whether it's hourly wages or gig economy or working multiple jobs or having a household with multiple income earners, right? On the other side, you also see things like, well, how are folks using new products like buy now, pay later, all of these things that are much more dynamic, much more fluid, and not always represented in the data sources that have traditionally been used, right? And so the tools and data as a result need to evolve. And of course, ultimately, I think that's how it also intersects. It's really about how that user behavior intersects with our marketing and acquisition channels. I mean, what's so amazing to me when I step back and look at things is the prevalence and the dominance of direct mail, even after all of these decades, as a way that we reach out to users about financial products. And there's really good reasons for that. There's a really good quantitative reason why those continue to be the case. It's such a potent kind of channel for us because it has the data. It's linked in with the kind of a positive selection. All those things, though, I would argue are changing more and more as we see these user behaviors change. And those are the challenges that we hear from our partners, what they're trying to figure out as they kind of take the next step in their growth.
Yeah, it's funny that you mentioned the direct mailers. I was looking at credit bureau revenues, and a non-trivial chunk comes from direct mailers. I
Yeah.
would never have expected that, but
Yeah. And sometimes I feel like we have like just an environmental obligation to try and change that because of the amount of
yeah,
paper being used in the world for that. We've all received dozens and dozens, probably every month, really. But yeah, it's there because it works.
yeah, totally. Um, cool. So thinking about the lending landscape as a whole, obviously the concept of a marketplace isn't new, right? Think of Amazon in retail, Expedia in travel. Where do you think financial services and lending marketplaces are in their evolution? And how has it influenced what you're building in Engine?
Yeah. I mean, I think we're incredibly early. There's so much more that we could do, and there's a few reasons why that's the case. If you think about like an Amazon, as you mentioned, the consumer preference there is no different than what you might see on a financial marketplace, right? Um, they want convenience. They want selection. They don't want like their information, like in the case of Amazon, their credit card or something like that, like just kind of, they use folks like Amazon because they know they can trust that their kind of quote unquote wallet and PII are being kept in one place and not kind of being strewn across the web, things like that. Those are all very common. And we see that over and over with consumers interacting with financial marketplaces. I think what ultimately is different though is that unlike Amazon, where if you want Advil, you can just kind of select it. In financial services, the consumer picks the product, but the product also picks the consumer. There's all sorts of other criteria, especially in the lending space, that drives that matching process. That means it's a step function harder to facilitate a transaction than you might see on let's say an e-commerce. I think that's incredibly one sign that like we really need to take a different approach to how we match consumers. And of course, maybe it was implied, but certainly data is the core of that matching process. The second is really about the user experience and how, you might call this checkout in the e-commerce space. Imagine you went to Amazon and you shopped for Advil, and when you went to check out, you got directed to Advil.com, right? And then you had to like buy it on Advil.com. That sounds crazy to us all because consumers, because that would be incredibly inconvenient. But the reality is that's how a lot of financial services transactions take place. There's a kind of almost like a flea market of options, and then you need to go to someone's website or somewhere else, and just like before, you're typing in your information to all of those places, right? And that certainly isn't great from a consumer standpoint. So there's a lot of road ahead in terms of like how do we really create a financial marketplace, not even of the future, but just of our like standard expectations for today.
Yeah, I love that Advil example. It really does draw attention to how crazy it is with the current setup otherwise. Yeah, I hadn't heard that one before, so I like that. So I guess digging into that a little bit more deeply, what are some of the market drivers and changes in those actual consumer expectations that led you to investing here?
Yeah, I mean, a lot of those changes kind of work both ways, right? So we have the consumer expectations. We have a whole raft of companies that want to deliver better user experiences as part of this process, and have an incentive to, because it really drives conversion rates, and then also making sure we get the right users that in lending, one of the really kind of interesting dynamics is that someone who's a less risky customer has a much lower bar for inconvenience, right? They may be, let's say, borrowing money because of a project that maybe just helps them lower their credit card payments or fund a home improvement project. They're not doing it necessarily for immediate cash flow needs, things like that. So that customer who's less risky is going to have a very low bar for friction, right? And so you get a better customer if you have a better experience. I think that's certainly true. And I think one of the things that we've seen is that customers and consumers overall have really embraced kind of open banking. I think with companies like Plaid, I mean, I got an invoice from a landscaper who had worked on my backyard, and I was invoiced through this small business platform, and I paid for it using Plaid. I happened to know the UI, and I saw that it was being facilitated using a Plaid flow. So those kind of things are being more and more common, and I think we no longer see the kind of hesitation that consumers maybe that we saw from consumers like 10 years ago, right? In terms of linking their bank account or entering in their bank credentials. There's a lot more trust now. It's a lot more familiar now. And I think that gives us a lot of confidence that we can take the next step in terms of integrating that more into a financial marketplace. When we've done our tests around consumers opting into sharing this data, over 90% opted in. I think that's an amazing number that makes folks realize like, oh yeah, sharing this data will help me potentially get more offers or more accurate offers, and certainly will help me streamline my kind of checkout process downstream. So I think that's those are all things that we're really excited by.
Totally. And honestly, getting 90% of consumers to do anything is crazy. So the fact
Yeah.
that they're doing this as well on the lending flows is pretty fantastic. Um, so what are the product principles that guide the work that you've been doing here, that you've been focused on to drive this forward?
Yeah, I mean, look, a lot of it says like, what's the financial marketplace that we want to build? What are the aspects or the pillars of it that really make it durable and something that works for every party, right? So, for financial marketplaces, it's got to work for the consumer, it's got to work for the product provider, the lender in this case. It's got to work for the person kind of driving traffic to that financial marketplace, right? There's got to be kind of an equation, a business equation in there for them. And so when we looked at all of those things, we said, okay, what are the four, like the North Star we're going to have? Number one, we have to empower users with transparency and clarity, right? That what am I sharing? Who am I sharing it with? All those kind of things are really critical to build trust and repeat usage. I think that's an obligation for all of us, right? Um, I think that will be codified more and more in regulation and 1033 and things like that. But we should really be ahead of those things. We should be setting the tone for those things rather than having to be forced by them or anything like that, right? Um, Another is really around friction, right? We talked earlier about the detriment of friction, and I think our one of the things we're really excited by, and I think we'll talk about in a bit, is some of the tools that Plaid is creating to reduce the friction, to make it more convenient, to be able to streamline the process. I think that's incredibly important. The bar here is something like a credit pull, right? The credit pull, even then, there's the friction of entering in your PII and things like that. But certainly, it's a straightforward opt-in, and then of course for the product provider or the lender, it's easy to pull that data as well, right? Uh, Third is around empowering providers. At the end of the day, we're building a marketplace so that they can find and acquire the right user. What are the dimensions by which they need to, manage their own risk policies or identify who they need to lend to or how they want to balance, let's say, a growth objective versus a margin objective, as an example, right? Those are all things that are true depending on this very, rich ecosystem. Different folks will have different objectives. How do we balance all of those things? And then ultimately, I think this is true for data, this kind of data as a whole, kind of the cash flow data, open banking data, is we need to, for many folks, it's new to them, and therefore they really need the analytics that can power their increasing their comfort level, increasing their expertise. Of course, we're always optimizing, and how do we optimize a program and ultimately get comfortable with the data. And so, how do we tackle things like retros and things like that can really help us help the ecosystem evolve and understand how to use this data. I think that's incredibly important.
Yeah, for sure. And going back to something that you were saying earlier on the transparency of data and helping consumers understand sort of with clarity what's going on. I think the very classic school of thought for product managers is like the more disclaimers you have, the more transparency about data, the worse your conversion is going to be. But
Yeah.
I think what we've been seeing is a shift as well in the consumer expectations, where the reverse is actually the case now. If you are really clearly and transparently describing the kinds of data that's being shared between parties, that can actually have a very positive impact on conversion, which I think is just not something that a lot of people have drilled into their heads yet. So it's good to see that you all sort of share that sentiment.
Yeah, absolutely. And look, like I said, I think the nuance here is the point I was making earlier about kind of e-commerce. Like I think a lot of those adages, I guess you could call them, came from a world where, e-commerce was the benchmark on those kind of things, right? How do we get people through and get them to, through their shopping cart and beyond, right? But in financial services, it's so much more nuanced. There's fraud, there's positive and negative selection bias, there's, all these things where, you want a really well-informed user. Not that you don't want it for e-commerce, but at the end of the day, like, this is the start of a relationship with the consumer. And, these products don't end on origination. They oftentimes last years, right? And so, and there's a lot of money at stake. And so obviously you want a really well-informed consumer.
Yeah, totally. So switching gears a little bit, we've recently embarked upon a very exciting adventure together. So can you talk a little bit more about what we've been working on together and why we're so excited about it?
Well, I mean, look, Plaid and MoneyLion have a relationship that goes back many, many years. And, like I said earlier, MoneyLion's really been about how do we leverage this kind of data on behalf of the consumer to create better user experiences, better financial decision-making, all of these things. This is really an evolution of that is incredibly exciting to me because, rather than maybe we were in the past a client and vendor, not in a pejorative way or anything like that, but here we're really bringing these technologies to, as we mentioned before, like a marketplace, so we can further the industry as a whole, right? And so I think we're extremely excited by two things. One is our partnership around Layer and how can we integrate Layer into our processes. We talked a lot about friction and Layer's ability to leverage data on hand to be able to create a low friction flow that still is very, very transparent to the user, is really appealing to MoneyLion and what we're trying to build on the engine marketplace as we build in this data more and more into that ecosystem. That's one. Second, in terms of CRA, I think, like I mentioned 10 years ago, how this was big data was a little bit of a wild, wild west. There wasn't these like structures in place. And I think, as the rules of the road have been laid out, as this kind of ecosystem of tools and capabilities have been brought to the market, like Plaid's CRA products, that gives lenders, financial institutions, even more reason to start using this data or continue using this data to meet their goals. So I think those are two areas that we're really excited to bring to, not just MoneyLion, but also the industry as a whole through our marketplaces.
Yeah, I think it's pretty exciting to see you all sort of forging the path ahead here. This is an industry that's still largely relying on traditional credit bureau data. So seeing a player as large as yourselves kind of validates that top of funnel cash flow data is going to be really valuable both for your customers as well as consumers is pretty exciting from my perspective.
Yeah, I mean, I would not that we're all here to pat ourselves on the back or anything, but I would say the same with Plaid. I mean, I think the recognition that you guys have that this is ultimately about a user experience is actually something that I find really refreshing. I think in some other data sources or bureaus or things like that, which are incredibly important, but traditionally they've left the user experience for the enterprise companies using that data, right? And what that meant is that sometimes you had high friction user experiences. I think Plaid looking at this as almost like a B2B2C type of approach where the consumer is still at the center has meant that there's a lot of innovation there that I find really exciting.
Yeah, definitely. So, all right, you have a magic wand. You can wave it and change one thing about the overall lending experience. What does it go?
Oh, well, we certainly touched on it. I think there's like friction. friction is the key one, and how does someone be really in control of their data and be able to, as with as little friction as possible, um, uh, be able to allocate it to who they want. I think that would be incredibly powerful. It's obviously why, we've partnered in the way we have. Um, I think sometimes we'll hear from our lending partners that, well, friction can really drive out some of the fraud, and there is good friction in terms of sometimes you just got to ask someone to scan their driver's license and to verify who they are, right? Those things are very real, very much there. um, but I think sometimes that's done at the cost of everybody. These like kind of edge cases get kind of allocated to everybody, including really good folks, and therefore it's the opposite of the rising tide. It's kind of like the thing that drags everyone down, right? And so the more tools we have, and with fraud, the more tools we have around these concepts of lowering friction. I think that's ultimately, if I had a magic wand, um, uh, I wish we could solve those problems instantly.
Cool. Good answer. I like that. So, kind of bringing things back around again. Cash flow data, we talked about, it's not new, right? Lenders have been using W-2s, they've been using, general pay stubs, bank statements, all that good stuff for a long time now. But what has held back widespread adoption? What stops it from being more than just sort of like a second look underwriting technique from your perspective?
Yeah. I mean, we've talked about some of them, so I won't repeat the things around friction and things. I think things like second look or kind of like swap in type strategies are a result of some of that friction that exists there. But look, I think the things that we could be really optimistic about are the kind of enhanced and evolving um, frameworks that we have as an industry for using this. I think about, of course, like kind of the fintechs that are the fintech lenders and things like that, but still, there's a whole world of established financial institutions that are earlier in their journey about using open bank data and things like that. That I think regulation will certainly help. Standards increasingly are helping. Um, Responsibilities and obligations of all the parties being really well defined will actually make sure that um, everyone's playing nice, and that ultimately that consumers own their data, and the notion of data portability is the established kind of rule of the law, right? And I think that's incredibly powerful. And so I think that's where we touched on layer, we touched on CRA. Those things all contribute to that framework that broadens adoption.
Yeah, definitely. So, looking ahead now a little bit, what do you think is underrated in lending today that you think is going to be the next big thing, sort of 5 years out, right? Like if you look at cash flow data, that's just been the kind of obvious one. Everyone's been like making that more streamlined, smoother, easier, more accessible has been the thing that so many have been looking forward to.
Yeah.
That's finally coming into view now. So what's the next thing after that?
Yeah, I mean, to your point, I think folks call cash flow underwriting today, like 10, let's say 10 years from now, will just be underwriting, right? We'll see it alongside. It's not going to replace credit bureau data. It just sits alongside and will provide whether it's a wider underwriting box or more precision in selecting the consumer, or being able to respond more quickly and more real time to changing user behaviors or conditions. I think those will all just be fairly standard and given. Look, the one thing I think I touched on it before, but to your question is how do we make lending and some of these decisions and and things like that. How do we meet the customer where they are a little bit better, right? If you can kind of reduce things down to the most simplest ways of looking at it, consumers either need to go somewhere to do this or somebody comes to them, right? So point of sale would be coming to the consumer. How do we do point of sale lending? How do we do that like at the moment? Direct mail, for all its warts, right? Certainly is about meeting people literally where they are. But then if you look at a lot of marketplaces, it's about like it's about being a destination, right? I would love to see a lot more work. And clearly we believe in this hypothesis. Engine fundamentally provides these embedded marketplace technologies that others use to embed it in their time and place and to their user. I would love to see a lot of innovation on how do we meet people where they are at time and place. Certainly that's going to be the case for things like already the case for things like mortgage and auto loans, in terms of getting doing that at the dealership point of sale and BNPL. I think the next big kind of lending products continue that trend of being, where the users are, where they're making the decisions. Whether that's, I hate to say it, social media or other places where they can really, where those decisions are being made. And so that's, if we're setting aside cash flow data, which we would say is number one, the other would be around how do we meet people where they are.
Awesome. Great. So I think that's a wonderful thought for us to wrap the talk on. Thank you so much for being here, Tim. I thought the conversation was super interesting. And of course, we're really excited to continue partnering with MoneyLion on building the future of financial services. So thank you for coming. Thank you, Tim, and have a great rest of your day, everyone.
Thanks, Alan.